So we return to our love-hate relationship with gloves, and they're back in the news because a lot of the companies are reporting that the numbers, many people believe that the worst is over, especially since the COVID highs or the oversupply overhang, right? So why is this potentially, according to some people, the bottom?
Yeah, exactly. After many years of pain, a lot of institution has been giving sell call. You can see over here, right?
Yeah.
As time goes by, there's more sell call. At least right now, there's some sort of reduction over here. Supermax also is not getting any good thing. Also, you can see over here, right now, there's only one, I'll say institution that is covering. So many of the institution already kind of gave up on covering these glove stock because there's zero catalyst, right? And finally, in just a few days ago, these four stocks actually went up, especially for Top Glove.
It's almost as if the minute all the analyst community gave up, then the stocks started to rise, right?
Yeah, exactly. There needs to be some sort of one new positive news or tiny positive news that can actually push up the share price. So this is what happened to Top Glove, right? In just a few days, it's up 15%. And we're going to be diving deep into their latest quarterlies. So you can see over here, the numbers I would say is actually pretty normal, but it's decent because they are not reporting any negative in terms of growth. So you can see their Q4 2025 results is pretty muted compared to preceding, but it's better off as compared to last year's result.
It's still lower than what they achieved 10 years ago. No?
Yeah, as pre-pandemic times, it's still lower. But why is the market so positive about them, right? We'll talk about it later. Okay, so some positive thing that they reported is the sales volume is growing at 30% compared to last year, FY 2024. Utilization rate also is improving to 75%. Raw material price, which is one of the cost of production, is also reporting a decline in quarter on quarter. So it reduces some sort of cost for them. And all of this means is that their margins are improving and profits is going up. So this is a few reasons why the market like them. It's because Top Glove finally gave some sort of a recovery plan, or there is some sort of growth prospects for the future. So they say in 2027, most likely they can actually go back to pre-pandemic margins. So right now the margin is about 3.1%. They say that probably it's going back to 7 to 10% margin in 2 years' time. So this is a big positive already. At least it tells or it signals that it has reached its bottom already in terms of the cost structure. The second thing is that they mentioned cost control is very key. So they have been cutting a lot of big costs. They try to, I'm not sure whether they are still hiring more laborers or they're automating their production. But anyway, they say that they want to keep costs low as much as possible.
Or they better,
Yes, exactly. And they also say that in order to keep costs low, they also need to raise the utilization rate to 80 to 90%. So right now it's about 75%. So there's another 5 more percent-ish of improvement to 15%. So hopefully they can increase that utilization rate. And last but not least, this is I think the best or at least the most positive news is that they say that their cost structure is as competitive as China. So right now they're narrowing the gap between the ASP price. Right now it's about $3 per 1,000 pieces. So this means that Malaysia is not really resting on their laurels. Glove makers are always constantly improving their cost structure, and right now they're almost going to be as good as China. But the thing that you need to know, the bad thing, is that half of their cash is gone. You can see over here.
Perpetual Sukuk's crazy. Man.
Yeah. So previously they have about close to $1 billion in cash. Right now that billion become a 550 million. And the reason why it's reducing a lot is because they're paying down a lot of their debts, particularly the short-term debts and also the perpetual Sukuk. So you can see last time they own about almost $1 billion, and right now that billion of perpetual Sukuk becomes zero. So most of the cash they use is to pay down debts. Okay, the final thoughts over here is right now at least there's some progress. Everything looks smooth sailing. Hopefully they can continue to do that. And recently there's banter between China and the US, right? Because China is doing some sort of export control in terms of the
they're broadening their export control bans.
Yeah. So then the US kind of threatened them. They say want to give 100% tariff, and that also kind of give a little bit of a catalyst for the Malaysia glove makers, because if let's say the US really did impose 100% tariff, right, we are be more cost effective or more attractive, because right now our tariff rate is about 19% as compared to the China right now. I think it's about 80% for their medical gloves. So if you go up to 100%, it's even more attractive. The second thing, however, is that Top Glove cash is shrinking, while the other big two companies, which is Hatalega and Corsan, they still have a lot of gunpowder.
We also have to remember, I think some of Top Glove's challenges with the cash was self-inflicted because they took part of it to buy back shares, right, back in the day. So a lot of it can be used for days like these, you know.
Yep, exactly. But at least right now they are trying to like rectify their mistakes.
But I mean, they're the largest, right? So if really there's a return in the industry, you would presume they will have the largest cash flows.
Exactly. Okay, the third one is whether it is time to buy. If you look at the current valuation, Hartalega is trading at 77 times, top 50 times, whereas for Corsan is looks to be the most attractive one, is at 25.7 times. Okay, but whether if you want to like buy these three companies, well, you're kind of like betting on the fact that whether the top glove management, what they say is true lah, whether they are walking the talk that 2027 is the year of recovery. I think this is very key. If let's say it takes longer than usual, then at current price point, it might not be that attractive. So
the blue sky scenario is, let's say they say that 10%, right? That's the 8 to 10% is the margin they think they can achieve. So today, what's the margin?
3%.
Maybe 3%. So it's a triple, let's say, of profits. So then in 2 years' time, it is quite attractive, right? Because if you look at Kosan, let's say if they also achieve the 10%, but their net margin's a bit higher, right? So theirs is a double. So they will be about 12 times earnings, 15 times earnings. Whereas Top Glove right now is 50, right? 50 times earnings.
Yes.
So let's say a third of that is what? 17 times earnings. Is that attractive to you, right? Again, this is like the perfect scenario, right? Of course, no surprise, Hata will be closer to 25, 20 times, which is kind of like their historic norm. So if you believe in the words of Top Glove, as Jonathan said, then it's actually, potentially an opportunity, right?
Yeah, but I'll say the upside might not be as great as it was before because the valuation is already quite far stretched already. Like what MJ pointed out, it's just going to be 17 times at the perfect scenario, whereas for Hata, it's back to its pre-pandemic valuation, which is 25 to 30 times. So you need to see whether will institution pay out more for their premium in terms of valuation. Maybe that 25, 30 times, can they go up to like 40 times, 50 times? If they can, then maybe it is attractive. But if it's not, maybe at this price point, it is kind of like priced in already. But don't take our word for it because, market can change anytime. Who knows, maybe China become a loss making in terms of glove, right? Maybe the Southeast Asia countries where their glove production didn't do well and Malaysia will regain their market share to be the leader in terms of glove exporting. So if that happens, then yeah, it will be quite attractive for the big four companies. But anyhow, if you want to get more ideas from us, if you want to know what companies have a multi-bagger potential better than these big four companies, is inside FIRL Pro. And right now, you can get a 30% off by clicking on the description and comments.
And by the time you're watching this, the offer of 30% discount actually ends on the Monday, coming Monday. Inside FIRL Pro, well, it's your cheat code, right? To shortcut your research journey to find interesting ideas. We have a watch list of companies that we rank by order of interest. We have a lot of interest, medium interest, so-so interest. Just to give you a sense, right, where our eyes are looking at, right, when it comes to the stock market for opportunities. Then, of course, we also have write-ups for all these companies in our watch list so that you will not only know which companies you're interested in, but the reasons why we're interested in. And these reports or write-ups take you less than 15 minutes to read. If you want to get a taste of what's inside these write-ups, just check out the free sample, which you can find in the comment section or description. One company that we've covered is up 4 times, right? This would be Kellington Group. So if you were part of FIRL Pro since the beginning, which is about 3 years ago, you will be well rewarded as of now. So yeah, guys, thanks for staying all the way until the end, and I'll see you in the next video. Bye-bye.